Today, I am going to be talking with Paul Blasetti, and he is with Mission Mortgage, and he is a mortgage broker,
Yep,
correct?
yep, been a broker, yep.
So there is a difference between a mortgage banker and a mortgage broker. So can you explain that to the average person who doesn't understand our world?
Absolutely. I've worked in the business 25 years and I've worked almost all channels of lending from direct to consumer to banking to retail.
Okay.
Um, a mortgage broker has access directly to wholesale rates, and so there's no middleman, there's no overhead. It's me and the wholesaler. And so the margins are smaller, the pricing is better for the consumer, means more dollars in the pocket of the consumer. But as far as lending guidelines, I have access to about 15 or 20 different wholesalers.
Okay.
And that means more product, more flexibility,
Yep.
besides the standard vanilla programs.
Mm-hmm.
Self-employed folks get helped out with bank statements,
Okay.
1099 programs.
Okay.
If you're an investor and want to buy based strictly off of the rental income, that could be a possibility as well. So all different types of things instead of the basic W-2 pay stub type of lending.
Perfect. All right, because that's one of those things. So I'll have buyers come to me and they'll say, "Oh, well, I don't know if I'm going to qualify for whatever. I want to buy an investment property, or my credit score isn't great, or different things like that." So that's
Absolutely.
that's something, because you have so many different
Yep, out of the
lenders.
box type of lending, credit scores down to 500, little or no income, asset
Hmm.
depletion. If you have assets in the bank but you're not showing income, we can lend on those assets as well. So outside of the vanilla type of loans, there's all different types of options for consumers who think they're just unable to get that financing.
Yeah,
In the broker world, there's a ton more options than your standard bank or credit union.
yeah, that's so good. That's just so good. So anybody can try and figure out a way. And if they can't, you'd still be able to say to them, "Look, you have to pay down this, or you have to work on this to be able to get this loan."
100%. I've been in lending 25 years now,
Mm-hmm.
and I went to the broker world about almost 3 years ago because I knew there was a better way of doing business.
Yeah,
I knew there were better products, there
yeah,
was better pricing,
yeah,
customer service. You get to deal with me directly,
yeah.
but there were a lot of files and people that I have to turn down simply because they didn't fit that company's vanillas guidelines.
Correct.
And
That's
so
that's so many times that's the case. I know for like I've there's some investment properties on my horizon, and so I'm eager to do a DSCR loan. I haven't personally done one yet. So why don't we talk about some of these you different type of loans that you've been working? I mean, we all know you could do all the basic
yep.
stuff.
Hmm.
What are some of commercial lending? DSCR, just more than five units.
So yeah, so
Like let's dive into some of the actual
right.
pieces of
So
it.
if you want to buy an investment property today,
Hmm.
but you don't think you can afford it, as long as you have 20% down and a good credit score, and
Hmm.
the average market rental income in that area covers the mortgage payment, you can
Hmm.
absolutely buy an investment property. And you can leverage it one after another if you want to build an investment property portfolio.
Hmm.
Debt service coverage ratio is basically the main one out there today.
So
Um,
DSCR, debt
DSCR,
service
debt
coverage
service
ratio.
coverage ratio, right? So as long as your rents cover at least 75% of the payment, depending
Hmm.
on how much the down payment is in the credit score, mainly you wanted to cover it 1 to 1.
Okay.
um, you can buy that investment property. 2 to 4 units, absolutely. You can get into more of a commercial type of product, which is 5 units plus.
Yep.
A little bit more restrictive there, maybe a little bit of a higher credit score, a little bit more of a down payment. But you
Okay,
could
because
buy these
that's more like
properties
25%. Yeah, for that.
25% down there, maybe a little bit of a stronger credit score, but it is absolutely doable. Yeah.
Okay.
If you show no income, if you're unable or unwilling to show income,
Yeah.
you can buy these properties today,
Yeah.
which is fantastic because these types of loans went away in
That's
the
what I was gonna say. They weren't around for a long time, and now they're
long
back on
time.
the
They're
scene,
starting to creep
and that's
back.
what I personally haven't, and I'm excited to.
Yeah.
But with that being said, part of that too, with like a general primary residence or commercial, you should have to provide your taxes.
Hmm.
Where this you don't.
Yeah. Yeah. And if you are an investor or a potential investor at very exciting times, these products are only for investment properties, not your
And you
primary
have to have
residence.
some experience with it, correct? Like it's not just something that like,
They typically like to see that you have at least one rental
yeah.
property.
So you have.
There are companies that do first time as well.
Oh, okay.
It depends on the lender, and you may be a little bit more restrictive on the guideline if you haven't had the experience yet with any properties. But the more properties you own, the little guidelines get a little bit more lax.
Okay,
But
good.
yeah, absolutely, it's an exciting time for real estate investors.
Oh, for sure, for sure.
Yeah.
So what about like just straight fixer-uppers? Like somebody that it's a real beat up property. What loan type would you suggest
Yeah,
for
so
something that is like,
there's two different avenues to go that way depending on the profile of the client. There's the FHA 203K loan, which will allow you
yeah,
to buy a home
that's a good point.
and fix it up.
Now there's a lot of more stipulations with a 203K, right? You have to hire a property manager basically to
Yeah, it's a little bit
a
more
general
scrutinized.
contractor, not property manager, general contractor,
Yeah.
and they follow up. You have the timeline,
You have a
correct?
timeline, you have to have plans, and it's usually for major repairs, less for cosmetic things. You can add a pool with an FHA through
Oh,
203K
that's a
loan.
neat little loophole.
Yeah,
I
yeah,
did not know
absolutely.
that.
Fannie Mae has what's called the Fannie Mae home style loan. Fannie Mae is targeted for people putting probably more like 20% down,
Gotcha.
but want to um,
Make renovations and put it in, because the way that's structured, and correct me if I'm wrong, is like the appraisal takes place and you are lending off of when it's renovated. They
exactly.
appraise it for once you finish the work versus the state it's in currently.
Yep.
So you're using future equity
The
with that
ARV
loan
value,
type.
right?
Yep.
So you'll have the home purchase, and then you'll have the contractor come in and give you plans and say it's going to cost X amount, and then
Mhm.
the appraiser will say, well, if you're adding X amount of square footage or doing this type of rehab, the after renovation value will be
Mhm.
X, Y, or Z, whatever it may be, and we basically lend on that. Yeah.
Gotcha. That's great. Yeah. I mean, so let's talk for a second. Let me pick your brain about just general commercial. So somebody wants to buy a mixed use building, for example. And I understand a lot is their portfolio, what they have going for them. But in general, what do you see somebody that's like, look, I want to form a REIT and I want to go buy a large mixed use building?
Yep.
What would be some of the guidelines for a commercial loan for
Typically, you're
that?
seeing 25% down on that.
Okay.
They're going to take a look at, these lenders are taking a look at the population, the average income in the area,
Okay.
how much traffic is moving through that area, especially if it's mixed use. Let's
Yeah.
say you have a couple different commercial stores in the bottom, maybe some rentals on the top.
Yep.
They'll also take a look at the rent that's coming in on the top to qualify for your income as well that way.
Gotcha.
You're going to have, this is true commercial now, and so
Okay.
interest rates are going to be a little bit higher than traditional residential lending because it's labeled commercial, whether it's 5 unit property and above, or
So
if
the
it's
rates are
mixed
higher.
use. Rates are a little bit higher
Okay.
because it's commercial, and also your insurance is going to be a little bit higher as
Substantially
well.
higher.
Yeah,
Gotcha.
yeah. So once you go above 5 units,
Yeah.
or you have mixed use storefronts at the bottom,
Yeah.
apartments on the top, yeah,
Gotcha.
it's a little bit more restrictive in the way, but yeah,
And that is, so the commercial loan, that's where you provide 2 years tax returns like you would a regular property, correct?
On mixed use, yes, but if it's
Mhm.
strictly DSCR, you could do
Yeah.
that debt service coverage
Then you
ratio.
want
If
it.
it's 5 units plus,
Yeah.
and it's just rentals,
Yeah.
it's classified as commercial because it's 5 units and above. So you're going to have commercial insurance, which is going to be a little bit more expensive, and the
Hmm.
rates will be slightly higher once you get into that 5 unit threshold plus.
Okay.
But yes, if it's not mixed use and it's strictly based off of, you just have rental income there, we
Yeah.
would do the DSCR loan without
Perfect.
income.
So the DSCR, you can, so long as you keep having the 25% down, you can keep going.
Yep,
To
yeah,
build
so
your
2 to 4
portfolio with that.
units, you
Yeah.
could put as little as 20% down. 5 units plus is 25% down.
Gotcha.
Yeah.
Okay. Okay. So that's beautiful.
Yeah.
I mean, that's straight beautiful.
It's great because these programs, they
Yeah,
left
they're
the
out there.
market a while ago, and
Yeah.
they're slowly starting to come back. But again, it's just for investment properties. They
Yeah.
haven't done it with the primary residence yet, but
The 85-15s and the 80-10.
all
The
those
80-10-10s
piggyback
from way
loans.
back. Yeah.
Yeah, I mean, they're starting to creep back in,
Yeah.
but I think we've learned our lesson
Yes, yes.
on lending 15, 20 years ago.
Yes. Yes. I'm only 22 years in, so yeah, I do recall
Well,
those
you
days.
remember it.
I do,
You
I
remember
do.
it.
I was part of that. I remember when the appraiser would like call you and be like, "What price are you at?" And it would be, "This is the price, and these are the comps that I used." Like to justify it.
Not anymore. The most liberal program out there now is the DSCR loan. That's
Yeah,
it.
I mean,
None of that
that's-
stuff happens anymore.
Yeah,
So
and that's where I know for me, I want to jump in on the DSCR window while it's here.
It's
Like
great.
blah blah blah, blah, like yeah.
Absolutely.
Yeah, there was a property Josh saw yesterday where he was like, "You should talk to Paul about that." And I was like, "Yeah, I don't know. I'd rather not talk. I want, as you know, I have two big things on the horizon.
Hmm.
But we won't get into me. What are some other loan types that we haven't covered that are, like
Yeah, outside
that
the
are
box,
unique? Like
non
obviously you can
QM,
do all the regular stuff. You can
QM,
do the
qualified mortgages. Yeah.
yes, you could do all the vanilla stuff.
Yep.
You can somebody's a 640 credit score or above, and they want to go buy, whatever. You can find
Yep.
them a great rate.
Yep.
Somebody wants to go buy a 2 unit like you did for Arlo and Ellen.
Yep.
They
So
can go. You can help with that. And
Mission Mortgage, we dabble in the non-QM world, which is the non-qualified mortgage, anything
yeah,
that's not backed by a GSE, a government-sponsored entity.
yeah,
It's Fannie Mae, Freddie Mac, VA, USDA.
yeah.
So outside those guidelines are non-QM loans, such as, again, if you're self-employed, 1099,
Mm-hmm.
right? Let's say you get 1099 income,
Mm-hmm.
but you write most of your expenses off and you show nothing in the bottom line. Well,
Mhm.
you can't qualify a traditional QM loan, so
Yeah.
we can do bank statements.
Okay.
There's asset depletion. So if you have a lot of assets in the bank, but maybe say you're drawing your 4% rule and you're only taking X amount of money out of that in
Yeah.
your 401k and you can't qualify,
Yeah.
we can give you a loan based off of assets
Okay.
as well. Yeah. Bank statements is another one.
Yeah.
Business or personal bank
That's good
statements,
for
12
business
or
too,
24
because there's a big
months.
difference for tax purposes. Like
I see so many
on your
clients
business,
that
you have so much coming in, and then on your personal, you write it down.
Exactly. Yeah, I see it all the time.
Mhm.
Clients have a lot of money coming in the bank. They just don't show it on the bottom line on the adjusted gross
Mhm.
income on the tax return.
I see that a lot in the commercial world. When I'm
Yeah.
selling, restaurants or commercial things where they have a lot coming in, but then what they're paying taxes on. So the lender has to add back their salaries and add
Yep.
back,
Yep.
all of these different things that they truly have going on.
And depending on the loan, we'll usually take about 75% of the average deposit on personal and a little bit higher than that if it's a business
Okay.
bank statement.
Gotcha.
So the folks who were self-employed who really got stuck from 2008 until maybe 2018 for about 10-year period.
Oh yeah,
I mean,
the
they were
lost
really,
decade in real estate. I
really
remember going
stuck.
on appointments and it would just literally be like, just hold. Like,
Yeah.
just hold. Like, you're so underwater. Like, just
Yeah.
keep afloat. It's not going to be forever.
Yeah.
But yes, I want out. I'm sure you want out.
Yeah.
But if you can hold, you're never at a loss if you don't sell.
Yeah.
So hold for now,
Yeah.
and it will come back. It will, and history repeats. It's like you can see all those the
Yep,
ebbs
the
and
ebbs and
flows.
flows. Yep. The crashes, the ups and downs, and for the self-employed folk, they now have a legitimate shot
Mhm.
of getting financed. Where 7, 8, 9 years ago, there wasn't much out there.
Yeah. Oh, for sure.